GM, everybody, welcome back to the channel. Today is Monday, the 13th of January, 2025. Let's get straight into the price action because we can see Bitcoin is currently making new lows. These are new lows really going all the way back to the middle of November. So, yes, Bitcoin showing some weakness here, and we'll sort of get in a little bit more as to why Bitcoin is showing weakness. It seems to be that the dollar just doesn't want to let up on its current rally. Stock market's also under some pressure today, but Bitcoin is coming into what I believe is a area of opportunity. If we look currently at the drawdown from obviously the high to our current low, we're looking at around about 16.8% drawdown. I've talked about us coming down to potentially this moving average, this 100-day moving average, which would be another 2% lower. Obviously, if we did come down to the mid 80s where we have more support, we're looking at around about a 21%. So it looks like, in my opinion anyway, the majority of this correction is done in terms of the price. I also think we are coming towards the end of this correction in terms of time. We've really been consolidating in this range pretty much since sort of around the 20th of November. Obviously, we're now at the 13th of January. So potentially we have one more week of consolidation. That obviously takes us into the Trump inauguration, which I think, potentially could be the catalyst for putting a low into this market. Obviously, if we do continue to sell off into the inauguration, then potentially I could see that as being a pivotal point where the low for this market might come in, and I'll get in a bit more as to why. I think that could be a good area for a low in a second. But if we just go through, obviously we had these paths on the chart here. As I said at the end of last week, I am expecting that we sort of play out a bit more time in terms of this correction. And I said that our original path, which had obviously served us very well up until the end of last week, that we could deviate away from this path. And that is what we are doing. So I will actually remove that one now because it's pretty clear we're not just going to mark up from here. And it looks like we are going to get that push lower, which we are seeing today. So I'm very much seeing this as being a sweep of this 90,000 level and potentially down to 89, 88. If we lose that, coming down to around about 85. And then I'm seeing a reversal. And, we've got some big macro data tomorrow. We have the inflation data that's coming in tomorrow. Obviously, if inflation does come in hot, then I expect us probably to come down lower, maybe into the mid 80s. If the inflation data comes in as expected or lower than expected, then this would obviously be really bullish for risk assets, not so bullish for the dollar. And because obviously then it puts the pressure back on the Fed to revisit lowering interest rates this year. Obviously, the Fed, as so far, have said they're going to go down to maybe one or two rate cuts. The market's now starting to think there may be no rate cuts. So this obviously sort of sets the baseline very, very low for this year when it comes to any sort of stimulus coming from the Fed. And with the dollar where it is, I really don't see how the Federal Reserve cannot cut rates this year. So I'm starting to call the Fed's bluff. I think at some point the market will be as well. But obviously the fear in the market is giving market makers, is giving the more patient traders reasons to obviously squeeze this market lower for now and put pressure on those over leveraged traders. And I really think this is what we're seeing. I think we're seeing a real shakeout in the market here. And I would not be surprised if we get a strong turnaround after tomorrow's data, potentially putting in the low this week and looking to make our way higher over the next few weeks, and obviously the month, the rest of this month, and going into the rest of Q1. So I am thinking that potentially, well, if you look at our path, this move down that we've drawn on is the move we're seeing right now. Obviously, this is not completely to scale in terms of the timing, but yeah, I am thinking potentially as early as tomorrow we could be looking to put a low in around about that inflation figure. Obviously, if the number does come in good, i.e., a lower inflation number, so that's what I'm going to be looking at. Just looking at our other Bitcoin charts, we can see we are into that value area. This has been drawn on for quite some time now. I've been saying if Bitcoin does dip into this yellow box here, this is an area that I'd be looking to take positions in. Obviously, this does not mean I'm just going all into the market with all of my capital at the top of this box when this enters. Obviously, we could still come down to the lower end of this box where my buyers would get heavier and I'd start to get more aggressive because I'd then be saying, look, we're coming to the point of maximum opportunity where obviously the invalidation, i.e., us losing the mid 80s, this 85 level, I've got a clear invalidation knowing where I need to get out of the position. So obviously my risk is tighter. We're coming into the 100-day moving average. Things start to get really interesting for me if we do push on a little bit lower. But even from here, I'm fully open to the fact that we could be making some sort of trap pattern. Obviously, people starting to get very, very bearish here, expecting lower prices, and the market just hangs around this sort of 90,000 level up until the data tomorrow. And like I say, if that data comes in good, then potentially we could be in for a really big week this week and a pushback to the upside where obviously a lot of traders have got trapped. They've got flat-footed, expecting lower prices, and those lower prices never actually come to fruition. And yeah, we can see obviously we're starting to invalidate the last Fibonacci. I guess with this, we can see we do have this Fibonacci extension here, this 1.618 coming down at 84. So I might just leave that on now, just so we have this 84.5 level on there. But obviously you can see really our main levels of support coming in around about 88. Next one potentially on this chart would be 84 and a half. Like I say, mid 80s, I think is worst case scenario for now. But let's see what happens over the next day with the data. Just going on to our liquidation uh, heat map then. And we can see here, looking at the last 24 hours, when it wants to low up, we have taken out a lot of the liquidations that were below price here. So these were starting to get pretty heated, coming down to around 90K. Obviously, there's still a little bit more around 90K. So do we actually flush the 90K level, put an 8 handle on the price and sort of panic the market out one more time before buyers then start to step in and run us higher and potentially on a run higher, on a squeeze? If we do get a squeeze, I'll be looking back to around sort of 92,500 up to about 93,000 and sort of seeing what happens from there. If we do just go on to sort of a longer term look at the liquidations, this is just looking at 2 week liquidations here when it actually wants to load. We can see in terms of longer term, we have taken out some pretty long term liquidity as well down at this 90,000 level. So this has obviously been a major level for some time, us coming into sort of 91 and a half thousand. So we have dropped below there. And this obviously gives indication that that is a good reset. Of course, we could still come down. We could still come down to around 88K. We still have a fair bit of liquidations currently in the price. We've got sort of coming down to about 45, 30, 35 million, all the way down to about sort of 88,000. So potentially we see that sort of move. And then the rest of the liquidity is really going to be sort of above price and above the highs from the weekend, and obviously above the highs from sort of the last week would be where I think we would go once we confirm a low. I think we could sort of run there fairly quickly. So yes, most of the liquidations below price have been taken out, but this does show we still do have a little bit further to run if we do sell off a bit further today. And I also wanted to look at the ETF flows as well here. So apologies about the laptop, how slow we're going today. But yeah, we can see we've gone through a period of really extended outflows. We haven't seen too many occasions where we've kind of had outflows like this. A lot of the inflows that sort of took price up, we're now starting to reverse. Obviously, we have said in the past that when we have seen more extreme outflows in the price tends to go up from there. Obviously, when we've seen extreme inflows, it can likely um, sort of put sort of tops in the price. So it's going to be interesting if this inverse relationship does continue, then we would be expecting to see a low for Bitcoin coming in fairly soon. I would have thought it could be around that sort of 93, 92,000 level when we saw all these outflows at the uh, around the end of last month, around the end of December. It looked like potentially we were going to see some sort of January effect where the inflows would pick up into January and we'd actually be onwards and upwards. But we are coming off again. We've seen these outflows come from the ETFs again. So potentially there is a bit of hopium here as well to kind of say that look, the outflows are picking up. That could be a sign of a bottom. And I think the other hopium that I wanted to share is the fear and greed index. I guess it sort of was looking like hopium a few days ago when we last looked at this on Friday. Obviously, we had this move down to 50. Now we've come back up into the greed. So what I would really like to see is probably a move below 50, and maybe that happens today, obviously with price dipping to new lows or new recent lows on Bitcoin, but we can see just where we were 4 years ago. We had the fear and greed index come down to the 40 level. It came just below the 40 level. So potentially we can see how moves into the 40s have liked to act as areas where we've turned around from. And potentially we do see one more move lower below the 50 level into the 40s on the fear and greed. And for me, that would be a pretty good sign that we are turning around. So let's go back to the charts then. So that's Bitcoin covered. Bitcoin, like I say, really we need to see buyers starting to step in from here, between here and the 100-day moving average. I am expecting some sort of reaction. But like I say, big economic data tomorrow. Potentially we sort of go sideways into that. Maybe we get some volatility at the open that pulls us a little bit lower. But I do see this as an opportunity for the reasons I've mentioned, for the fact that we've taken out the liquidations. We're starting to eat into some longer term liquidations just below this 91,000 level. We are also looking at the fear and greed index starting to come down. It's hit 50. Potentially we go below 50 today if we do see some more of a sell-off today. So yeah, I am thinking this is a good opportunity right now in Bitcoin. The other one that I've been talking a lot about is Ethereum. I'm thinking that Ethereum is a good opportunity here. We've swept under this low, so we swept below 3,100, making a new low on Ethereum, but we are finding a bit of support on this trend line. I've talked about us potentially coming down to the 200-day moving average on Ethereum. I've talked about us back testing into this 2,800 level as well. I think as somebody that is fairly bullish on these markets, what I would like to see is I would like to see these levels get front run. I'd much prefer it if actually the traders waiting for entries at the 200-day moving average, waiting for entries at 2,800, don't actually manage to get in at those prices, and they then have to chase the market higher. If we do turn around quickly, i.e., data tomorrow is good, then potentially we do get that scenario where we've made the flush of this low, everybody started to get bearish, people are starting to look for lower targets, and then we get run aggressively the other way. So that is one potential outcome that I'm looking at for Ethereum. But of course, if data comes in bad tomorrow and things continue to sell off, certainly if Bitcoin continues to sell off, without a doubt, we're going to see Ethereum start to bleed out. And those targets are absolutely on the table. And this is why last week I did say that I did de-risk. This is what I had to prepare for. I had to prepare for prices coming down to slightly lower levels. I'm not saying the bull run is over, but of course you want to try and get in and position into these assets at the best price, especially if you're leverage trading. That is what we're trying to do. I've picked up a little bit more Ethereum here. Obviously, for now, I'm waiting to see if any of these lower targets get hit. If we do recapture 3,100 and then start to get back above some of these moving averages, that will look fairly good for me for a low here. Obviously, it's good to see this flush. This is what I was waiting for after selling Ethereum last week to start to get back into Ethereum. So it's all set up right now. Everything is starting to line up in terms of what I'm looking at. Solana also has flushed its low from last week. It's come down. The current low for today is what 174 is that? 174.24. So we've come just above the 200 moving average. So similar to Ethereum, potentially that gets hit. But for now, Solana has swept the most recent low and it's starting to see some buying coming into the market. So that is encouraging on Solana. Obviously, I talked about getting into the reasons as to why we were seeing pressure on Bitcoin and crypto, and it's really due to the dollar. The dollar coming up above 110 today, and it's seen a little rejection off there for now, but I wouldn't put it past the dollar squeezing a little bit higher later on today. Obviously, we are looking for some sort of rejection in the dollar. I've been talking about the fact that the last time that President Trump came into office, this is going a full 8 years back. So this is back at the start of 2017. We just go back and take a quick look. Better to do this on the weekly chart. But if we go back to 2017, at the start of 2017, you can see dollar was very, very extended, very high. Trump came in, he said he wanted a weaker dollar, and the market started to come off, and it was pretty much down only for the next year. So I'm thinking to myself that probably the top for the dollar does coincide with Trump coming into office. It's obviously not good for the US economy and US exports to have a very strong dollar. So I think he'll try and weaken this. There's ways he can weaken this. There's obviously sort of printing of more dollars that the US government can do in terms of spending plans, in terms of obviously fiscal policy, which could lead to a weaker dollar. So potentially those are some of the tools that Trump could use. Obviously, Jerome Powell and the Federal Reserve are responsible for the monetary policy in terms of interest rates. Whilst Trump cannot directly lower rates, I'm sure he will be putting the Fed under some pressure to look to lower rates. And of course, a strong dollar makes US exports more expensive, should help to soften the inflation read. So obviously at the moment we're seeing unemployment sort of come down a bit. Obviously, if the economy does start to struggle from the higher dollar, we obviously know that rates are still at a level that historically, or certainly recent history, are fairly restrictive and make obviously mortgages more expensive, make borrowing and loans financing more expensive for the economy. So potentially that weighs on the inflation figure, and the US economy in the short term does bring inflation down slightly. And again, I really do think, and again, this is a big sort of statement to make, but I really do think probably by the end of this quarter, we're having conversations again about the Fed cutting rates probably in the first half of this year. And I do think that the dollar will start to fall back down, potentially back down to 107, potentially below 107 in the first half of this year. That is me sort of putting my neck on the line with some predictions on the macro, which is not always easy to predict. But obviously that would then obviously set up stocks, Bitcoin, risk assets for a bullish remainder of this year after some initial turbulence in January. So there's some of the thoughts that are currently in my head. And obviously that would also give some relief to the bond market as well. Obviously, bond prices really struggling right now. Yields are flying. These do really have to come down. And I'm sure Trump and his team will be looking at ways to obviously sort of try and get bond yields down, get the dollar down, get the economy back up. So obviously S&P starting to roll over a bit today. We can see we've taken out the recent lows. So obviously we have to play this a little bit defensively for now. I know a lot of people are talking about us coming down and retesting the 200-day moving average that has not been retested since 2023, November 2023. So this is one target. Obviously, if we did come down here, then it would be a further sell-off of about 3% on the S&P, and that would be a total sell-off of around 8. So still a single-digit sell-off, which sort of given the jitters in the market is definitely not anything sort of out of the ordinary or anything surprising. And obviously that would probably put pressure on crypto. So again, talking about Bitcoin looking to come down a bit further to around sort of the 88,000 or mid 80s, that would definitely go sort of hand in hand with that. And the Nasdaq is coming and testing its 100-day moving average. So I guess that's the hopium for you, that the Nasdaq finds a reversal and stocks find a reversal here, that we get a better inflation number tomorrow, and we start to V-shape and start to rally aggressively out of here. Obviously, otherwise, if this level gets lost and we do start to come down further, we're looking at probably a move back below 20,000 to hit this descending trend line and the Nasdaq's 200-day moving average. So I'm going to wrap it up there. Obviously, a bit of a longer one today, but quite a lot to get through. Obviously, I've said ideally I'd like to see Bitcoin hold this longer term trend line, this trend line that is going back and cutting through the highs of the previous bull run. It's bounced just above that for now, but of course, as I've mentioned throughout this video, there is still a lot of risk or a lot of factors that can weigh on this market, and we still have to be prepared for more downside. I mean, as long as we're not closing consecutive weekly candles below this trend line, it's very reasonable to assume that this trend line could get breached, could get taken out. We could consolidate below, making a bit of a trap scenario for then a move higher towards the end of this month, or going into early next month. So yeah, it would not be a complete death sentence. Obviously, we still have support just below the price. So it's going to be a really big 48 hours for the crypto market. Obviously, the inflation data I do think is going to be really big on this market when that comes out tomorrow. So that's going to, I think, likely give us the direction for the rest of this week, whether Bitcoin does see some lower targets met or not, or starts to sort of reverse a bit more aggressively from where it currently is. And like we've said before on this channel, the market, when it gets going to the upside, it can take off very quickly indeed. So I think really at these levels, you just have to be positioned and you have to be prepared for lower prices. But obviously, I think it's wrong probably to have no exposure. I think the best position to be in right now is to have some exposure and be in the position to increase your exposure if we do see lower prices over the next couple of weeks. I think probably come the end of this month, we are starting to turn around, and I would have thought that February and March end up being pretty good months and big months for crypto, provided we see the dollar start to come down and the macro backdrop start to improve, or at least speculation and or anticipation that the macro backdrop will start to improve, which it's like today's news becomes yesterday's news very quickly and gets forgotten about very quickly. We all started to panic last week about the US government selling some Bitcoin. No one seems to be talking about that anymore already. It seems like, I don't want to say it's a nothing burger, but it seems like that those sales, that they're probably not imminent, and that might take some time for that to all happen. And like I say, with Trump saying he wants to create a strategic Bitcoin reserve, maybe he puts a complete hold on that altogether when he comes in. We'll just have to see how that plays out. So yes, big couple of days ahead of us, and yeah, I'm going to leave it there. Stay safe, Have a great day, everybody, and I'll talk to you all again tomorrow. GM, GM, GM.